Kia ora tātou, ko Russell Hutchinson, tāku ingoa. Ke Chatswood Consulting aho I mahi ana. No England, Scotland, Netherlands aku tupuna, tēnā koutou katoa. You can probably tell I'm at the early stages in terms of learning to row. But it's good, I think, to make a contribution to carrying the treasures of the past into the future. Although you might be able to guess what I said, my name's Russell Hutchinson. I run Chatswood Consulting, and my forebears come from England, Scotland, and the Netherlands. And welcome to our panel. With us today, we have three superstars of reinsurance, if one can use that term. And so first of all, on the far right, we have James Louw, who's Managing Director of Gen Re. And then in the middle, we have Kresh Wright, Acting Head of Life and Health at Swiss Re. And then we have Nicolas Carro, CEO of Munich Re. And before we get into our panel, I just really want to acknowledge that reinsurance is incredibly important, especially in a small market. Virtually all of the life products that we offer in this market could not be offered without the long-term thinking, the depth of capital, and the expertise that reinsurers bring and offer freely, in my experience, to the market. So we're incredibly grateful for their contribution. And we're going to explore in today's session what those sort of the current leading issues are in terms of reinsurance. And there are quite a few moving parts, if you like, in terms of what's going on in the sector at the moment. So we've probably got a much longer list of questions than we can properly address over the course of about the next 50 minutes. But I'm going to kick off with some from my list. I have the iPad on which your questions will appear if you post them through the app, and it would be great if you can. It would be best of all if we can target the next 45, 50 minutes at the things that you most want to hear about. But to get things underway, I'm going to join our panelists over here, and we're going to kick off by asking about what you think the greatest opportunities are in terms of reinsurance. If you'd like to introduce yourself and just talk about what you think the biggest opportunity and the biggest threat is, first of all. And so, James, would you like to?
As I was introduced, I'm James Louw, so I run the Gen Re business for Australia and New Zealand. I think the key thing, Russell, you said the industry would, I don't know what your words were, but would struggle without the reinsurers. I don't think that's true. I think this industry is perfectly capable of standing on its own 2 feet, but we, as a reinsurance industry, we are here to serve the insurance industry and hopefully make things a little bit easier from time to time, and help them carry some of the risk. That's what we do. So the opportunities for us here are the same as the opportunities that the insurance companies have, and those opportunities for me are to increase the amount of insurance and cover that New Zealanders can have. I think, and whatever we can do to help that, we will do to help that. So for me, that's the key opportunity. There are lots of threats, I guess. Insurance is about risk, and risk involves lots of threats, and I guess the pandemic is the obvious one that we've just been through. And I think my message here is that New Zealand handled it very well and got off very lightly in terms of insurance costs and claims, not in terms of other things. But I think these sorts of tail risks are an ongoing threat to insurance in general, and New Zealand would be no exception. There were parts of the world that had insurance mortality losses that were extremely high over the last 2 years, and so what that means is people are dying, and that's been a real struggle in other places. And as I said, New Zealand's lucky, but these sorts of tail risks are still out there, and people and the insurers should be aware of them, and people in the community should be aware of them and try to protect themselves against them.
Thank you. Yeah. Kresh.
Good afternoon, everyone. My name's Kresh Wright. I'm currently responsible for Swiss Re's life and health business across Australia and New Zealand. Hopefully you can still hear it, but I'm a proud Kiwi. I grew up in Wellington, but it's been a while since I left. So, yeah, New Zealand's very, very close to my heart, and I'm really proud to have the responsibility for Swiss Re's business in New Zealand. I guess as a reinsurer for Swiss Re, we have had a long history with insurers in New Zealand, both on the life side and the general insurance side. As a reinsurer, not only do we provide risk capacity to our insurance clients, but what we also pride ourselves on, and along the lines of what Russell alluded to as well, is our risk expertise from our experiences globally. I think is something that we think brings a lot of value to both Australia and New Zealand, and the learnings that we have from experiences in different markets as well, I think, is one of our strengths. In terms of opportunities and threats, I have to say I'm glad I agree with our competitor in terms of the threat being underinsurance in New Zealand, and that, as translates into the opportunity not only for us as a reinsurer, but for the insurers in the market here. Again, I think in terms of solving that problem and closing that gap, there are lots of learnings we can bring from other markets where we've seen different styles of products and different experiences to the markets here and to our clients here. I think one of the biggest challenges for us as a reinsurer, and probably as reinsurers in general, is that we are one step removed from customers and advisors as well. So what we would like to do as a reinsurer is to get closer to that and to understand the challenges that insurers are going through as well, in terms of the advice market and customers, with the ultimate aim of closing the protection gap in New Zealand.
Awesome, thanks.
Thank you. So I'm Nico. I head the life insurance business for Munich Re in Australia and New Zealand. As you might recognize from my accent, I'm French, so since a few days in that rugby match, I have now less friends in Australia and more friends in New Zealand. It's the right place to be here today. So, in terms of our business, and I'm trying not to repeat what my colleague said here. We're in the business of diversification, and being global, it allows us to help insurers insure risks which wouldn't be insurable otherwise. A very prominent risk on the general insurance side in New Zealand is the earthquake risk, which if you would price this risk standalone would probably not be insurable anymore. But because we also reinsure earthquake risks in Mexico, cyclone risks in Australia, hurricane risk in the US, that pool of diversification makes it possible for us to offer that at acceptable prices. And the same applies to a lesser extent also in the life insurance space, where for very high sums insured, or let's say accumulation risks in certain lines of business, we also help here to reduce the risk. So globally it's about diversification, locally it's also about risk management to support our clients here reduce basically their balance sheet risks by taking either a share of their risks or taking over the peak risks in their business. So that's probably the biggest opportunity, and it's quite a structural one. The biggest challenge for life insurance in general, and to a certain extent, and also to reinsurance, is, in my view, the question of affordability of insurance in the near future. Obviously, COVID has taken its strain already, but a lot of programs from the government to support here have dampened this impact, and we've heard this morning there's a lot of uncertainty around the economic development, and I think we're going to talk about this a little bit more. And of course, in case of recession, the first thing which people will look at is what kind of short-term costs could they save, and the cancellation of a life insurance policy is then very often the first action they take, and understandably, but of course this has more long-term implications. So that's where we also have a role to play to support the industry.
Yeah, it's interesting that you mentioned some of the other things that you insure. Obviously, you mentioned earthquake risk there, and we're going to come back to some of those other issues in a moment. But you started to talk about those economic issues, and plainly we seem to be sailing in the direction of some sort of more economically turbulent times. So would you like to expand on that? And so since you've started, go for it, Nico, and then we'll carry on.
Well, obviously, for those who were this morning listening to the Deputy Governor from RBNZ, we have inflation, which is an issue which, according to him, is going to be under control soon. We will see. I think it's very, very difficult to predict, and opinions on that diverge amongst the experts. We also have interest rates, which are increasing, and either way, it's quite unlikely that we will have in the short term a scenario where we come back to low inflation and low interest rates in combination, and therefore, whether it's inflation staying high or interest rates, there are challenges here on the topic of affordability. If home loans and mortgages get high, of course, that will put the economy under strain, and that will certainly push the risk of recession to a very high level. And recessions for insurers are, in the life space, historically correlated with higher claims levels. I'm maybe not going to expand on the reasons right now. Could do that later. So obviously there's a heightened risk environment here for us if a recession comes, and this is definitely on our watch here at Munich Re. Nice,
yeah. Kresh.
I guess in terms of the high interest rates and high inflation, I see a couple of positives as well. One of them is that in New Zealand, and I think it was mentioned yesterday at the chief economist session, that wage growth has actually outstripped inflation. So, from that perspective, hopefully that helps to buffer some of the affordability issues. The other one is also that, in the middle of all of this, we're also at the tail end of the pandemic, and that has actually raised the awareness of insurance and the value of insurance during uncertain times. So I think that affordability is a huge issue, and life insurance is definitely one of the first things on the chopping block, even ahead of general insurance, which I guess a lot of people see as a much more immediate need. So I'm hopeful that the positives outweigh. And maybe one last comment I'd make is, from a practical perspective, the unemployment rates being so low, that's a huge risk for all of us in terms of, first of all, filling roles with appropriate talent, but managing our businesses as insurers and reinsurers, ensuring we've got the right expertise to manage claims and to give our customers the attention and support that they need. That's another huge risk that comes out of where we're at as an economy right now.
Nice, yeah.
Yeah, hard to go on the tail end of that when you're not an economist, but it's hard to get past interest rates and inflation at the moment. And some of the other impacts that haven't been mentioned are not that positive. There's, for example, increase in claims costs on disability claims because they're generally linked to CPI. They're not always capped, sometimes they are. So, that hurts insurers to some extent. It does depend a little bit on whether they match their assets and their liabilities and how well they've done that. But in general, high inflation on disability claims cost is probably not a good thing. There are other things that are sort of longer term issues that are not really economic but are related that we've known about for a very long time but still people aren't addressing very well. Things like the aging population and demographics and immigration into New Zealand, for example. These have all been impacted, and the pandemic is just going to make these things come at us a little bit quicker than before. So on balance, I think Nicolas mentioned if there's a recession coming, that's not going to be good. But there are a lot of positives as well in terms of where the economy is going longer term.
I'm personally bullish for the outcome for insurance, in the medium term in New Zealand. I think there are some great fundamentals. On the one hand, obviously the protection gap's a tragedy. On the other hand, that means there's plenty of room to grow. But you've mentioned some of those negative factors around recession risks and so on, and obviously one of those is affordability. If we end up in a situation where unemployment rises, or even if you're in employment, then household budgets get squeezed by rising interest rates. But you also mentioned the impact on claims and how claims tend to rise, and it felt like there's a bit more that we can say on that. So, and also perhaps from there, just to expand on what the challenges are within insurers and reinsurers about managing through the impacts of those situations where we've got perhaps high interest rates and high inflation. You look keen. Kresh, go for it.
I'll go. So in terms of claims increasing as a result of the recession, I guess I see two aspects, and it's really about the income protection claims here. First of all, on the mental health side, we expect actually to start to see more and more mental health claims as a result of all the affordability issues as well. And then secondly, it's about the duration of income protection claims as well. So for people who are already on claim and suddenly in this environment where maybe unemployment rates also start to increase, then their work prospects are just not as good anymore as well. So it almost feels easier to just stay on claim till things settle down and the outlook is more positive. So that's what we're kind of on the watch out for at Swiss Re.
Yeah, and you've done some work around increasing mental health claims in Australia, I believe, too, which,
I can go into that a little bit. I know there was a session just before on mental health as well. But yes, Swiss Re, a couple of months ago, we released a white paper on mental health claims in Australia, and it was quite interesting. We saw in the lead up to COVID an increase in mental health claims. So in the 5 years roughly leading up to the end of 2019, and a very strong expectation that we'll see some kind of a shock, maybe not all at the same time, but over a period of a few months perhaps, a bit of a shock on mental health claims. I think what we'll also start to see, or what we expect to start to see, is more of a demand from our community around, support and treatment for mental health conditions. People are now much more aware of mental health as an issue and have a better understanding of it and are more comfortable with seeking treatment and support. So we expect to see that coming. In Australia, we've already seen the government kind of up their provision of community support for mental health conditions. And then I guess a bit of an early warning sign in Australia as well is that in our workers' comp, we've already seen an increase in mental health claims there. So that is a precursor to seeing similar in terms of the private sector as well, we believe.
Right. Nico, you were talking about exploring some more of those links between recession and claims.
Yeah, I don't have much to add to what Kresh said here. Maybe the only thing is, in Australia in particular, there hasn't been, I think, a true recession since 30 plus years. So it is some form of unknown territory. So everything we're putting forward here, obviously, are just assumptions of what we think was trends we've seen, but we've seen in a quite favorable economic environment. So it will be interesting to see how this develops, and also how the features of some of the products which were developed years ago, let's say, behave from a claims perspective in today's societal environment, which, as Kresh explained, is quite different from what it used to be. Also, on the positive side also, right? Because it is actually good that mental health, the acceptance of mental health as a disease is much more widespread in society. There's no doubt about that. The challenge for the industry is just that some of the products which it developed years ago were not really prepared for that scenario, and there's a catch-up which has been taking place already, but which probably hasn't had yet the test of a really recessional environment.
Yeah. James?
Yeah, I won't cover mental health anymore. I mean, it's kind of obvious that the amount of claims that insurers pay affects the premiums that policyholders pay. So over the longer term, I think the industry's benefited from, and policyholders therefore, on two longer term trends, and that is within trauma, cardiovascular events, rates are going down, and within mortality in general, people are living longer and healthier, and mortality rates are coming down. So in some ways, those have offset some other issues, but I don't see a lot of positivity about future claims costs. I don't see too many factors driving them down anymore. Those two trends are slowing down. There's a limit, I guess, to how much mortality can improve, and the same thing on cardiovascular. And there's some sort of longer term trends that aren't as positive, and some of these other unemployment related or recession related or economy related drivers pushing claims costs up are likely to dominate. I also worry a little bit about long COVID as a new claim cause. Not really that much from a point of view that clinically it's going to be so severe that people really are going to be very heavily impacted for a long duration, but it's more for people that are already on claim. It's just another reason not to go back to work if you are impacted and you have a particularly generous benefit. So that is a bit of a concern. And then also on trauma, we've had a little bit lighter than expected claims experience on trauma. And that could well be because people are not going, for example, for cancer screenings because of lockdowns and COVID, and there's a risk that that's going to unwind over the next year or two, impacting trauma claims costs in the shorter term. So I think on balance, some of the good news that we've had in the past is drying up, and some of these things that are going to push claims rates upwards are going to probably continue into the future. Yeah.
Well, you've come to a reinsurance session. There was not going to be lots and lots of good news, was there? So, but you mentioned a couple of things there. I mean, some of those things that you mentioned are clearly related to the unwinding of, pandemic-related restrictions and approaches to managing the pandemic and so on. And as they unwind, they're going to have impacts, and maybe there's sort of deferred claims activity which is going to be picked up. I'm interested to hear your thoughts on that. But I'm also interested for you to call out which kinds of trends you think are sort of transient and they'll wash out within a couple of years, say, and which ones do you think are turning points or much more long run. So it'd be good to explore those. Kresh.
I guess, so James spoke a little bit about mortality and, the limit improvements we see. I guess in the wake of COVID, of course, everyone's, since the beginning of COVID, we've been wondering, are we going to see a massive mortality shock and excess mortality? In Australia, actually, the Actuaries Institute released some figures recently showing that excess mortality was 12% for, I think, the first half of this year, and their expectation was that most of that would continue for the rest of this year. And again, part of that excess mortality is directly related to COVID, part of that is from other causes as well. And when you delve in a bit more deeply to that, again, you can see all of this is pretty much coming from older lives as well, so over kind of 65. And that's exactly what, so Swiss Re globally, in our experience in the US in particular, we've seen exactly that. Lots of, we have seen a massive mortality shock, but it's been at the older lives. So I think with all of that said, I think that's definitely a transient issue. Hopefully we'll see the back of that in the next kind of few months, and then a return to more normal levels. But again, who knows? As we enter the endemic COVID, maybe we have a new level of mortality that is a little bit different to what we had before. Maybe I'll pause there.
Thanks.
Although I think it's fair to say that overall the long-term trend of mortality was that there was an improvement trend, so this might just be probably slowed down in its pace by what you were just explaining. I think maybe from taking really the global view here, the pandemic risk has always been in risk models, right? From whether it's insurers or reinsurers or some external experts, but it's fair to say that it's been quite underestimated, which happens quite often when you have events like this, which happen every 100+ years. That's just everything changes, of course, and business interruption, for example, was not at all on the cards of many insurers or insurers in terms of what kind of issues and claims can arise out of this. I think the excess mortality, we haven't had it in Australia and New Zealand, at least not during COVID, but certainly countries like South Africa, some insurers have had 40 years of profit wiped out just because of their COVID mortality claims. So I would expect that at a global level, at least, the kind of awareness and pricing loadings for such risks would tend to increase. Now, how that plays out locally in different markets, that's very difficult to say because competitive forces also always play a role here. But certainly the risk had been underestimated.
Yeah, absolutely. And a reminder that if you'd like to submit questions, please do. I think we've probably covered the question about sort of the challenge of rising claims prices against affordability of cover issues. But I am interested in hearing a little bit more about. We've kind of talked about which trends are transient, but which long-run trends have begun to emerge. Maybe they've been masked by our focus on the pandemic, and there's still things that we need to kind of like return our focus to, and think about how we need to manage those.
Well, the one we haven't mentioned so far is disability income.
Yeah.
New Zealand doesn't have the sort of acute nature that they had in Australia. Whereas, as you know, there had to be a very big hammer blow of intervention by the regulator. But I think in New Zealand...
when you say the acute nature, you mean the kind of pressure in terms of IP claims? Yep.
Very acute, very heavy losses that happened pretty quickly over a number of, a couple of years. Whereas I think in New Zealand, the situation here is not as severe, but it is what I would say chronic. And disability income costs, I can only see them increasing, let's call it low and slow in New Zealand, which is an easier thing to deal with in some ways, but in other ways it's also more insidious, and it means it's harder to deal with because nobody wants to, for the sake of a few percent every year, change anything dramatic. But if that continues over a long period of time, which it already has, and I think it will continue to do so, I think that is going to cause eventually affordability issues for policyholders more than they already have where disability income is expensive. So, but I think that in itself creates opportunities. It creates opportunities for new products and new approaches and people to try new things to cover policyholders for the things that they really need. that better manages some of the risks that are leading to this slow increase in claims costs. So I think the problem is there and it should be recognised, but I think the solutions here will be softer and easier than they were in Australia.
Softer and easier, the easier, softer way. Yeah, we could like that. I know that when we've published articles in this market highlighting, what's gone on in Australia and the changes that have been made, the reaction of some of our distributors has been, well, there isn't that problem here, and that's. But it sounds to me like it's more a question of scale, not direction. Yeah,
well, scale, yes, but also speed. It's sort of, I would say, low and slow here.
Okay, yeah.
There it was quicker.
Yeah, so it's not emerging as fast. So I'm glad that you raised the subject of the income protection changes in Australia. And, I'd be very interested to hear what each of you think in terms of whether or not those changes are going to work. and if when you look at those, which of those you think are more likely to be required in our low and slow change environment. That would be very interesting. Nico, go for it. Yeah.
So maybe just to recap, because I'm not sure everyone
Please do recap on what those changes
is aware of. Well, first of all, what happened in the last decade in Australia was mainly a very, very high loss burden for the whole insurance industry due to disability income products really derailing for mainly three reasons. Unsustainable product features, very large benefits and very cheap prices, intensified by competition, including from insurance and reinsurance industry. All of that has triggered, I think, 4 or 5 billion losses for the insurance industry in Australia after 2012 and 13 until recently.
And sorry to jump in there, but maybe your top 2 or 3 unsustainable product features in IP?
Yeah, sure. So just so one of them in our view at Munich Re is definitely the income replacement ratio. So when you go on claim, the fact that in certain circumstances a claimant could get more than 100% of his or her salary as an income protection claim. So obviously the incentive for that person to return to work at any point in time, especially if the policy is unlimited, reduces dramatically. That's one example. Then you have, of course, also very large sums insured sometimes, and that is not only on income protection, so also on TPD, which is total permanent disablement. When you have 10, 15 years of income or more as a sum insured, also here, the incentive to actually go on claim at some point can be quite high. So these are just a couple of examples, and there's more.
But yes, all right, and please carry on and tell us about which of those features of change are most likely to come here.
So as a result of the intervention of the regulator, there was 2 components in this intervention. One was more a stick putting capital loadings on the different insurers in proportion of them holding those DI legacy products. And then there was also a strong push for the industry to develop new product with more sustainable features, being, for example, a lower income replacement ratio, being also a shorter benefit period. So the agreed value was prohibited from, I think, March this year onwards, or was it already last year? Last year, time flies.
Yeah.
So all of that has driven to the launch of new products in the last few months, and I think it's very early days to say how this will play out. But quite mechanically, of course, due to the fact that some of the features have been brought down to more reasonable levels, right? They are still quite generous in the international standards. So when you compare it to what's offered in the US or what's offered in the UK, this is still very, very generous. So we're not talking about really, let's say, cutting down to a level which would. We don't have a junk product. We have still quite a very generous product. It's just a bit less than it used to be.
Yeah. Kresh.
I guess thinking about the new product in Australia versus the old. I think we still, for a long time we'll continue to have an issue with the old product, and one thing insurers are struggling with is how do you try to also de-risk the existing product when, by law we can't reduce the terms and conditions, but as affordability becomes an issue and people are forced to kind of look at reducing their sums assured and those sorts of things, then that's an opportunity as well for an advisor to consider the new product as an alternative to the existing product. And one of the things I guess we're worried about as well is that people who remain on the existing product will be those that can't get a new product because they wouldn't get through the underwriting, for example. And so therefore that old block just goes into the spiral of becoming worse and worse, and the prices go higher and higher, and who knows where that ends really. And maybe I guess in terms of New Zealand and where New Zealand is possibly headed, I definitely think New Zealand is in a much better position compared to Australia. There are obviously many differences between how the markets operate, ACC being one of the key areas of difference. Also, in Australia, life insurers can't pay for treatment for anyone on an IP claim. So it kind of means insurers are a step removed again and have less kind of control over the support they can give to their IP claimants. So that could be another reason that experience kind of spiraled out of control. I think that one of the big things to watch out for here in New Zealand, and maybe it's something to keep an eye on before things go bad, or as they go bad slowly, is the fact that a lot of the IP products here, the offsets. So where benefits are received from ACC, they're not offset against the product that the person has, so they can easily end up in a much better position on claim than they are by going back to work. So I think that but the income replacement ratio that Nico talked about, that is exactly what is happening with the with the MRI and business expense IP products in New Zealand. So that's one I think to keep an eye on.
Yeah, so it's another dimension of the total replacement ratio is the way we treat offsets with ACC and so on. Yeah, I saw some pretty poor reporting around our NZIS and how that would interact with IP in the last little while, and we might come back to NZIS in a moment. But James.
If I can just add to that, look, the insurance industry exists to pay claims. That's what we want to do. We want to protect people who are sick and in their time of need, and it's just a question of what exactly is that time of need. And the one Nico didn't mention is in IP, we will pay somebody effectively their salary for the rest of their working life if they can't do one duty of their own occupation. And if you just think about that a little bit, is that something that all policyholders should pay for? If there's just one duty of your own specialised occupation that you're doing at the moment that you can't do, should you get a benefit for the rest of your working life? And I think that's something people need to think about. We can provide that, but effectively everybody has to pay for that. And that means somebody who is more severely disabled potentially couldn't have afforded the cover at all, or couldn't have afforded the right amount of cover to protect themselves because they're paying for a bunch of people that have less severe illnesses and getting effectively the same amount of money. So I think the one thing that has changed in Australia is these one duty type definitions, or even more generous than that, because there's normally 3 and you can pick any one of them. They've been strengthened to you are unable to do your own occupation, which is better. And then generally after a period of time on claim, there's an encouragement for people to go back to work and contribute to society again by changing that to a sort of a broader definition, you have to be unable to do sort of a similar kind of job, not just your own job. And there's a definition around that. So I think that'll help a lot. You did ask, will it work? I don't think anybody wants to say yes or no. I think it will work, the changes that they've made. I think the battle, and this isn't a reinsurance specific problem, or it's actually, what I mean is it's a problem we're actually not well equipped to solve, is can people sell the new products? And I think the industry and including advisors in the broader industry there, we have to work out how to advise customers on the price versus features of the product trade-off. At the moment, it's always defaulting. It has always, and it will continue to default to the best advice is the most generous product, even if that's more expensive, because I don't have the tools to make that trade-off. And I think until we come up with a way somebody can solve that, which is a hard thing to solve, I do think we will be stuck into selling overly generous product features that lots of people don't actually need. So I think that's the critical thing for the industry to solve to make a success. It's not just about getting a new product out there.
Yeah, it's interesting you mentioned those product features chosen. Like, we know that most people, most advisors in this market choose to age 65 benefits, for example. They rarely choose 2-year benefits. They quite often argue against that passionately. And yet they routinely are choosing quite long wait periods. And interestingly, we're finding that the quoting for mortgage protection insurance, which is very often more limited, now exceeds the regular quoting for income protection insurance. So maybe some markets are able to kind of do what you're talking about. But I'm interested, we've got another one of those effects, which is the New Zealand Income Insurance Scheme, and I'm interested in what possible responses that you thought might be appropriate around that in terms of income protection coverage and how that might affect the marketplace for IP coverage. It's a tricky one. Who's keen?
Look, I think I'll go first.
Good on you, James.
I'm not an expert on this, but
yeah.
I mean, in many ways, if the government wants to pay for benefits that insurers are already paying for, in the short term, that'll benefit the insurers because they'll pay less and they'll charge the same premium. So in the short term, I guess that's the selfish view, and with my reinsurance hat on, I go, yeah, I'll probably make some profits out of that in the short term. But I think in the longer term, it's much more insidious than that, and it's the age-old problem where you think the government is looking after you, then you don't have to look after yourself, and you don't realize actually that what the government is offering you is very limited. And I think that's the issue that the industry has to address. People still need what the private industry offers, but people may think they may not. And that'll be, in aggregate, detrimental to society if that plays out.
Nice.
I mean, I think, well, first of all, advisors need to also understand what the IAS covers so that they can advise their clients appropriately on what the most appropriate cover is. And I think we've looked at the numbers as well, and we think that, most income protection policies in New Zealand will have to change, and most will require their waiting periods to be pushed out, and that's assuming people understand what the NZIAS may provide to them. So I think there's a huge challenge there. Premiums will drop significantly. There's the perception as well. So of what NZIS will cover, and I think yesterday Naomi pointed to a survey that Partners had done, and already there's a massive perception gap in what the ACC provides. So I think the government has a massive education job ahead if this is going to go through to ensure people have the right coverage.
Thank you.
I mean, at the end of the day, the cheaper price can only stay cheap if the claims also, or if the risk is priced adequately, and if when people go on claim, the claims are managed adequately. And as you also already heard in the previous session, for example, on mental health, this is a very, very complex topic even for experts. So if this is not your area of expertise, and I don't want to be political at all here, it's just a general statement. If you're a generalist and not an expert, it will be more difficult for you. So the risk that actually these cheap prices translate into much, much higher prices along the way, or that benefits are then cut to a very drastic minimum over time, is high in my view. So here a more public-private partnership approach might be something to think about.
Yeah, that could be desirable, yeah. Look, more generally, and we've spent a lot of time now talking about IP and NZIS, and that's kind of really depressing in a way. So thinking, we've had a few years now where, for a variety of reasons, sales have come down. But rather than focus on that, I'd like to ask you to tell us, what are the kinds of insights that you could bring from around the world to say these are the kinds of actions that we could take to grow sales as we look forward over the next, sort of, maybe we look past the immediate post-COVID disruption and we look forward over a period of time in, say, over the next 5 years?
Well, I'm happy to start. I guess when we think about why people don't buy insurance, I think that's an important question to answer in terms of tackling this problem. And so Swiss Re, we do these protection gap surveys globally, and one of the questions we ask people in that survey is, if you don't have insurance, why haven't you bought insurance? And like globally, the top 4 reasons that come up are the cost, that they've done a bit of work and they've decided they don't need it. So again, maybe perception is coming in here in terms of where they can access funds if they need it. The other one is that they're just confused by the products and don't understand them, so they give up. And then the last one is trust in advisors and insurers as well. So I think part of the solution to the problem is thinking about those 4 reasons and what we can do to tackle that. The other angle I would say as well is, as an industry, I'm not sure we've kept up with our changing world from a tech perspective and thinking about how consumers want to engage with us as insurers as well. So there's some catching up I think we can do there as well.
Cool. Yeah. Nico?
Yeah, certainly there's also a difference here in the approach which, as global players we need to take on developed markets and developing markets. Obviously the under-insurance in emerging markets is still very high. So there it is just about bringing the most basic products on the market first to develop that coverage of the basic needs. In developed market, the situation is different, as Kresh explained. Here it's more about how do we attract people in the insurance space who are maybe not, let's say, using the traditional distribution channels. Of course, the Gen Z and Gen Ys of this world prefer to tap on an app to buy things online. The challenge which the insurance industry has to overcome is the complexity of some products, just make it very difficult to buy online. And I think applying on your own for an IP product with all the different features might be overwhelming. So of course there is an important role still to play here for the advisor community, and this advisor community needs to be supported technologically and via cooperation with insurers, because without the advisor community, it will be impossible to really broaden the basis of customers.
Yeah, consumers are not very good at thinking about risk on their own.
Yeah.
And we know that they get exhausted by long, arduous application processes which involve lots of decision points. But some of the products that we've previously introduced to try and reduce the decisions that they have to take and simplify that, they have not fared well in recent conduct and culture reviews. So there's clearly a challenge there. James has the answer for us now. Yeah.
Look, I think there's a massive opportunity, and it's an opportunity that everybody globally is battling with, but it's just make it easy for people. And if somebody can crack that nut, I think there's a huge opportunity to get insurance to people that don't have it, to make the pie bigger for everybody and to serve society better. But it's just other industries, which are simpler ones, I think, have found ways of doing that. And insurance just has to keep working and find a way to make it really easy for people to get cover. And I'm not talking about guaranteed issue here. I think a level of underwriting has to be done and risk selection has to be done. But there are ways to do it in a really easy and engaging way. And New Zealand's a really innovative and agile marketplace, actually. And I think there's a good chance that it might be, this might be one of the first markets where people find a way to do this. And if you can, I think the opportunities are massive. There is one company in the UK, if you want to Google it, I'm not saying they've got the answer. And I've already heard that in New Zealand this kind of humour doesn't work. But if you Google Dead Happy in the UK, you may already know it. That's really an attempt to make it engaging and to attract young people. And in that, they've been very successful. I think the average age at application is 28 or something like that, whereas it's normally in the mid-40s. So that's really the challenge for everybody. Just make it easy. It's too hard. The products are too hard. The underwriting's too hard. Everything's too hard. Sectors that make things easy are very successful. So I think that's where we have to focus. And I know everybody's doing this. They talk about digital. That's what people are trying to do. But I think that's the nut that's got to be cracked.
And James has mentioned one, but as we turn that question over to you, Kresh, and to you, Nico, are there other products internationally that we don't have here? I'm delighted to hear that we've got an innovative market, but we must be missing a few tricks.
I guess so. We've done things in other markets where you use other data to try to pick the people who need insurance and who you can offer it to quite simply as well. So removing the whole, or as much of the underwriting process as possible. So that's one idea.
Nice.
So I wouldn't have in mind a new product, so to say, but what I can see in other countries is there's definitely cross-selling in different segments, which is sometimes no longer possible or no longer, let's say, performed in our countries here, whether it's with the banking sector, with the automotive sector. So really taking more an approach of kind of whole of life protection and thinking beyond the pure traditional distribution channels, I think is the best way to broaden the presence of insurance and the protection of the community.
Nice. So not so much product innovation, but process innovation. Yeah. James, I can see you're itching to jump in again.
I think Nico mentioned it. I mean, the obvious one here, some insurance companies have bought bank insurance, so I think the banks is selling in a bank environment, I think, is one of the obvious ones that some markets do really well and others don't, and I don't think it's going particularly well here. And that can get people used to insurance. It can be a small amount of cover, it can be very easy to get, and that can sort of get them used to it, and then that can feed sort of the advice market as people go through their lives and have different needs. So that's one of the obvious places that I think could be done better.
Go on.
Maybe I'll add one last thing. I mean, I strongly believe as well that education at younger ages around finance in general, but insurance as part of that is really important. And I loved Nicola's comment this morning, and she said, if you want an indicator of what our future looks like, look in our schools. And so, it's so important that I think insurance and finance, it's a life skill, so we should be learning about it at a much younger age. I think a kind of linked example is in Australia we have compulsory super with the default group insurance in there. So as soon as people start working, they're aware of that side of saving for retirement. Some people aren't as aware of the default insurance within super, but it's a great start, I think.
We're about to wrap up, and so just a quick fire round for bonus points is about 30, 40 seconds each on sort of very, what do you think the most exciting thing about the future of reinsurance is going to bring? Nico, we'll start with you.
Well, I think it's really supporting our clients, insurers, to provide more resilience and innovation to the community at the end of the day, right? Innovation via sharing international insights to help them develop new products and improve their own performance, and provide them resilience by providing balance sheet protection and capital relief.
Nice. Okay, James.
I think I'm excited that there'll be a product or a process or a method developed here that we could take to other markets in the world and teach them something. So I think that's the opportunity we've got.
That is an exciting thought. And Kresh, the last word?
For me, it's all about, for reinsurers, breaking through the kind of barrier of being a step removed from what's happening and really partnering even more with insurers to close that protection gap.
Oh, that's fantastic. Look, I really appreciate you being able to join us and share with you some of your insights from around the world. It's been a fantastic panel, and thank you very much for joining us. Yeah.